welcome back. Today, we're diving into the Compte-Titres Ordinaire, or CTO, one of the most flexible investment accounts available in France. If you're curious about investing in stocks, bonds, ETFs, or even international markets, the CTO is a gateway to all of that. But how does it work? What are its advantages and potential risks? Let's break it all down with clear explanations and real-life examples to help you understand if the CTO is right for you. Before we dive into today's topic, please note that the information provided in this video is for educational purposes only. It is not financial, investment, or tax advice. You should always consult with a licensed professional before making any financial decisions based on this content. A Compte-Titres Ordinaire, CTO, is a standard investment account that allows you to buy, hold, and sell a wide range of financial assets. Unlike specialized accounts like the PEA, which have restrictions on the type of investments you can make, the CTO offers maximum flexibility. Understanding how your CTO investments are taxed is crucial. 1. Capital gains, tax-flat tax, PFU. Profits from selling investments are taxed at a flat rate of 30%, which includes 12.8% income tax and 17.2% social contributions. Example: if you buy shares for $5,000 and sell them later for $8,000, you have a $3,000 gain. You'll pay 30% of $3,000, $900, leaving you with $2,100 in net profit. 2. Dividend tax. Dividends are also subject to the 30% PFU. However, you can opt for the progressive income tax scale if it's more favorable. Example: you receive $1,000 in dividends. The default tax is $300, but if your income is low, opting for the progressive scale could reduce this tax. 3. Deductible losses. If you incur capital losses, they can offset gains for up to 10 years. Example: in 2023, you lose $2,000 on one investment, but gain $4,000 on another. You only pay tax on the net gain of $2,000. Why consider a CTO? Here are the key advantages. One of the biggest advantages of the CTO is the broad range of investment options it offers. Here's what you can invest in. Individual stocks, from French companies like L'Oréal to international giants like Apple or Samsung. ETFs, exchange-traded funds. These funds track indexes like the S&P 500, CAC 40, or even thematic sectors like green energy. Bonds, government bonds, corporate bonds, and international bonds for fixed income. Mutual funds, professionally managed funds that invest in diversified portfolios. Derivatives, options, futures, and warrants for advanced strategies. Real estate investment trusts, REITs, invest in real estate markets without buying property. Commodities, access to gold, oil, and other raw materials through ETFs or derivative products. Example: Marie wants to create a diversified portfolio. She buys shares in European tech companies, invests in an emerging markets ETF, adds some government bonds for stability, and even holds a gold ETF as a hedge against inflation, all within her CTO. 2. No contribution limits. Unlike the PEA, which has a contribution cap of $150,000, the CTO has no limit on how much you can deposit. Example: Mark inherits $300,000 from a relative. He wants to invest the entire amount in diversified global assets. Since the PEA wouldn't allow him to invest more than $150,000, Mark opens a CTO to invest the full inheritance without restrictions. 3. Dividend flexibility. You can choose to reinvest dividends or receive them as cash. This gives you control over your income strategy. Example: Claire prefers to receive quarterly dividends from her investments in large multinational corporations to supplement her income. Through her CTO, she easily sets up dividend payments directly to her bank account. 4. Accessibility. Funds in a CTO are liquid. You can sell your investments and withdraw the money anytime without penalties. Example: Julian faces an unexpected medical expense. He sells some of his shares from his CTO, withdraws the cash, and covers the costs within a few days. 5. Easy to open. Most French banks and online brokers offer CTOs, making it simple to get started. Example: Emma opens her CTO online with a broker in less than an hour, uploads her documents, and starts investing the next day. While flexible, the CTO has some downsides. 1. Taxation. Unlike the PEA or Assurance VI, the CTO doesn't offer any tax deferral benefits. Taxes are due annually. Capital gains, tax. When you sell an asset at a profit, it's subject to a flat tax of 30%, known as the Prélèvement forfaitaire unique, or PFU, which includes income tax and social contributions. Dividend tax. Dividends are also taxed at 30%. Example: Lucas buys shares worth $10,000 and sells them later for $15,000, making a $5,000 profit. He owes 30% in taxes on that gain, which equals $2,500. This reduces his net profit to $3,500. 2. Currency risks. Investing internationally means dealing with foreign exchange risks, especially if you're buying assets in USD or other currencies. Example: Thomas buys U.S. stocks worth $20,000 when the exchange rate is favorable. A year later, even though the stock value increases, the euro strengthens against the dollar, reducing his overall returns when converting back to euros. 3. Potential for losses. Like all investments, there's a risk of losing money if the market declines. Example: Julie invests heavily in tech stocks right before a market downturn. The value of her portfolio drops by 20%, showing the importance of diversification and risk management. Opening a CTO is straightforward. Choose a broker. This can be a traditional bank or an online trading platform, e.g., Boursorama, etc. Provide documentation, ID, proof of address, tax number. Fund your account. There's no minimum deposit, but brokers may have their own requirements. Start investing. You're ready to buy and sell assets globally. Closing a CTO involves selling your assets, unless you plan to transfer them to another broker. Withdrawing funds. Transfer the cash to your bank account. Confirming with the broker. Officially request account closure to avoid maintenance fees. Important: make sure all tax obligations are settled before closing the account and contact bank or broker for the specific steps. You can withdraw money from your CTO by selling investments, convert shares or ETFs to cash. Withdrawing dividends. If you choose to receive dividends as cash, they can be transferred directly to your bank. Example: Pierre sells $10,000 worth of shares. After paying capital gains tax, he withdraws around $7,000 or $8,000, depending on his gains. When is a CTO the best choice? Diversified global investments. Ideal if you want exposure beyond Europe. High investment capacity, perfect for large sums without contribution limits. Active trading. Great for day traders or those who frequently buy, sell. Dividend income strategy. If you rely on dividends for income, the CTO allows flexible payout options. Example: Laura, an active trader, uses her CTO to capitalize on short-term market trends. Meanwhile, Paul uses his CTO to invest in dividend-paying stocks, generating a steady passive income stream. How does the CTO compare to other accounts? 1. CEL Focus. Saving for real estate with loan benefits. CTO Advantage. Better suited for wealth growth, not tied to housing. 2. Livret. A risk. Zero risk. Government-backed. Returns. Low. Currently around 3%. Liquidity. High. Best for emergency savings. CTO. Advantage. Higher return potential, but with market risks. 3. PEA. plan d'épargne en action. Tax benefits. Tax-free gains after 5 years. Limits. Restricted to European stocks, with a cap of 150,000 €. CTO advantage. No limits. Global investments. 4. Assurance v. Tax benefits. Great for long-term investing with tax perks after 8 years. Liquidity. Less flexible for early withdrawals. CTO advantage. More liquid, more and easier control. Ideal for active trading. The Compte-Titres Ordinaire, CTO, is an incredibly flexible investment account, perfect for those looking to diversify globally without restrictions. It's great for active traders, dividend seekers, and investors with large sums to invest. Please note that the information provided in this video is for educational purposes only. It is not financial, investment, or tax advice. You should always consult with a licensed professional before making any financial decisions based on this content. However, it comes with tax obligations and market risks, so it's important to have a clear investment strategy. Whether you're a beginner or an experienced investor, the CTO can be a powerful tool in your financial arsenal. What do you think? Is the CTO the right fit for your investment goals? Let me know in the comments. And don't forget to like and subscribe for more financial insights.